Good morning, good afternoon, everybody. I hope you're doing well. We are noon Eastern time, 9 a.m. Pacific time. So somewhere in between there or on either end, if you're joining us, thank you for sharing your time with us today. If you've done this with me before, which I believe you have, you know that before we get started, we have some eager people here. Thank you. I'm going to ask you to raise your hand if you can see my screen. You should just see the opening slide deck there, and that you can hear my voice and see our lovely faces in front of you. Thank you, Brenda. Thank you, Buffy and Curtis. Perfect. Okay, everyone, that's great. We'll go ahead and lower your hands. Thank you so much. Today, we are taking a look at understanding sales tax compliance and how it affects your business with my friends at Avalara. Ladies and gentlemen, it's a pleasure to introduce you to Octavia. How do I say your last name? I don't want to mispronounce it. I've never had to use it before.
Thank you for asking. It is Gerby.
Gerby, okay. And Octavia, you are the partner manager over there, and that means that you get to work with our Spire partners when there's interest from Spire clients about Avalara and how that might work with Spire. So that would be what you do over there, part of
Yes,
what you do.
ma'am.
Right. Okay, great, great. And Craig Brown is the sales executive at Avalara. Nice of you to join us here as well. And so you're pretty much in charge of putting together the Avalara options that clients would look at if ever they would be interested in that, more or less. Right, Craig?
Correct. Yep, that's it.
Good. Well, thank you both for joining me here today. This is a live session, just as I get into some of the housekeeping items before we start. And to respect everyone's internet bandwidth, you may see some of us pop on camera or pop off. I think Octavia will be able to hear your voice, but we may not see your pretty face for a little bit because of internet issues, but that's okay. A few other housekeeping items. You did participate in the sound check. Thank you so much for that. I also want to remind you that this is a go-to webinar. So it's not a Zoom meeting. We can't see you, but for the most part, you should be able to see us. And also, there are other events listed on our Spire events page. I'll make mention to the big event coming up next month towards the end of our session here today. You will get a certificate of attendance for those of you who are registered for the webinar and sitting in on this today. It's not a training event, okay? So we're not taking any questions or any Q&A, but we are going to be going over the topic of sales tax compliance and providing you with a lot of knowledge around that topic. So if it's something that you're facing in your business, you'll be better equipped to handle that. So no Q&A, but if you do have questions, save them for your Spire partner and they'll be able to work with Octavia and Craig to get you any answers to those questions that you might have. Perfect. So we're going to jump right into the agenda. This is a fairly new topic for me, so it's been really interesting to work with you guys at Avalara and learn more about sales tax compliance in the US. I am from La Belle Province, so I have a bit of an understanding of how a different province might handle sales taxes, but with all the states that you guys have down there, this is a great topic. So I think we're first going to take a look at, you know, why sales tax matters. Like, really, what is it? Why does it matter? Why is it important to both Canadian and American businesses who are selling products into various states? We'll get into some of the basic sales tax information, like including the where, who, and the what. I always like to have my guests kind of talk about the 5 W's, or as many as of the W's as you can answer on the subject. We'll talk a little bit about Nexus. That's not your pass that allows you to go through the airport and pass security. We'll talk about Nexus as to how that pertains to sales tax, when you need to collect, what considerations surround that depending on the different states and the different types of Nexus. We'll get into our friends at Avalara are going to share 5 steps that they recommend to managing sales tax compliance, and what kind of efforts your organization can take towards that. And finally, we're going to kind of sum it up with how do you streamline sales tax compliance and automate the management of that in your day-to-day business solutions, because it's quite a big ball of wax, as we're about to see, and really how the folks at Avalara could help you with that if you did want. Perfect. So we're going to move right along. Octavia, Just before we start, I think it would be interesting to ask our audience just a quick question here. Are you currently selling into the United States? And ladies and gentlemen, you'll see your poll answers there. If you could take a minute to answer that. Yes, we absolutely are selling into the United States. No, but it is in our planning. It is on the horizon. It's something our business has wanted to do. Or nope, we just sell within Canada. Spire is a Canadian product, so most of our clients are in Canada. Um, so let's see here. We're going to give it a couple more seconds. Almost all of you have voted, and guys, I'll be able to share those numbers with you very quickly. It's kind of neck and neck. I'm going to go ahead and close that poll and share the answers. Everyone should be able to see that. Octavia and Craig, can you guys see we are 50-50 in our audience today?
That is
Right down the
awesome.
middle.
Right down the middle, yeah. So a lot of great information to share with everyone here today. So tell me, Octavia, why does it even matter? Like, what is sales tax all about?
Thanks, Katie. So sales tax is really the states and the Canadian provinces trying to get their money. So the collecting of sales tax can be very difficult. We at Avalera say the only certain things in life are death and taxes. And taxes can be a headache. And so that really is what we want to jump into today and discuss. So just going into the where, right, for sales tax, it is important to understand where you're selling. Selling your products and services can have different obligations depending on whether you are only in Canada or if you're starting to sell into the United States. And each state and province has varying stances on what is taxable and what is not. But when you're selling those tangible goods, pretty much everything is taxable. But when you get into services and labor, maintenance, those kinds of things, you start varying your taxability by state to state. And so that's why we say the where is so important.
Okay. So depending on what you're selling, where you're selling it into, I mean, all different kinds of factors come into play.
Correct. And then we even get more complicated when we go into the who, right? Are we selling directly to customers? Are we selling to a business? Are we selling to a school or a church? Because those typically are tax exempt. If you're selling to a tax exempt customer, you then have to have an exemption certificate so that you can prove to that state or province, hey, I didn't collect sales tax on this because this is an exempt customer. So keeping track of all of those, plus then the taxability of your products and where you're selling, those 50% that said they're starting to sell into the US, you just opened up a whole new can of worms when it comes to sales tax compliance. So really understanding the where, the who, and the what that you're selling really relieves that headache down the road.
Yeah, I mean, I think we get into this a little bit later, but just managing the tax exempt documentation part of it, as I've learned, is a big ball of wax. And similar in Canada, right? We have goods and services that we might be selling to non-for-profit organizations or First Nations organizations that typically are tax exempt. And there are forms that Canadian businesses within Canada need to comply to as well. So not a whole different concept, but I think the volume of it is what we're going to look at when we talk about like the where, the who, the what as we go on further today.
Exactly. And for those selling into the US, I mean, all of our states pretty much operate as their own entities. So these rules change based state to state. I believe that's also the case for your provinces up in Canada. But just knowing exactly what the rule is in that state is the first step.
And I think that kind of segues us into the Nexus topic, right? So talk to us about, I hear Nexus and I'm like, oh, I can pass through security at the airport, but clearly there's a lot more to it than that. Why don't you share with our friends in the audience really what that is and what it means?
That's the fun kind of Nexus, Katie. This one, not so much. So Nexus essentially is the foundation for sales tax collection. Basically, it's the relationship between your company and a specific tax authority or state. Nexus is the obligation to collect and remit sales tax. And there are different kinds of Nexus, I believe, that we will touch on in the next slide. But the meat of it is the obligation to collect and remit sales tax in a particular state or province.
And I'm sure that there are consequences to businesses who are not doing this properly, or are not managing it properly, or aren't aware of the different types of nexus statuses that exist, that could present some challenges for a business, I would imagine. Octavia.
Oh, absolutely. You could be
Mhm.
audited by the state if they figure out that you are not remitting the sales tax, or even for those we touched on with the exemption certificates, if you did not collect sales tax because it was an exempt sale, if you don't have that exemption certificate on file, you may be on the hook for the sales tax that should have been collected. Those audits also come with penalties and fines. So you're not just paying what you owe the state or province, but a little bit on top of that. And we all know that the government is going to come get their money. So that's why
Mm.
it's so important to really understand where your nexus obligations are.
Mhm. Right, whether it's my government or yours, they're definitely
Exactly.
coming. Either way,
Exactly.
absolutely. So talk to me then about the different types of nexus. I mean, from what I can see, there's about 5 of them here. Tell me what they are, and I guess we'll get into a little bit about how a business needs to understand which one is best for them, and all of that.
Perfect. So the first one that most of us know is going to be physical nexus. And so that is when you have an office in the state or the province. You may have remote employees, you may hold inventory or send people across state or country lines. And then other physical things about your business. So a warehouse, maintenance work, those kinds of things will establish physical nexus. So I always remember you are physically in that state, so you have an obligation.
So
The
even let's say your head office is in North Carolina, and you happen to have a warehouse in Portland, Oregon, so that you can better manage West Coast shipments versus East Coast shipments, let's say. That would be an example of
It
physical
would
nexus,
be.
because you would be having a warehouse in a completely different state, correct?
Correct. So you would have physical nexus in both Oregon and North Carolina, and you would be needing to charge sales tax on any sales into those two states.
Okay, great.
Perfect. So the next one is going to be economic nexus. This is something that is a little bit newer to the US side of things. About 4 years ago, there was a Supreme Court ruling, South Dakota versus Wayfair. Wayfair, the furniture company, was selling a lot into South Dakota. South Dakota wanted their cut, but Wayfair said, hey, we don't have a warehouse. We don't have inventory here. We don't owe you any money. Well, the
Mm,
Supreme Court sided with South Dakota, and that is what started economic thresholds. So when you pass these economic thresholds, that means that you have an economic presence in that state, and you are then required to collect and remit sales tax. Let's go
mhm,
back to your example, Katie, of we have an office in North Carolina and a warehouse in Oregon.
mhm,
Let's say that we sell most of our goods into South Carolina, but we
mhm,
don't have a physical presence there. If we
mhm,
cross that threshold, which is typically $100,000 in sales, we would then need to register in that state. So we don't have anybody in that state for physical presence, but we do have an economic presence there. Therefore, we have an obligation to collect and remit sales tax to the state of South Carolina. Does that
mhm.
make sense?
It totally does. So really understanding where your sales are happening, and 100K, $100,000, that's not hard to hit when you're a wholesale distribution company who has a lot of customers on the Eastern Seaboard, let's say, right, or in any one of those other states that we're kind of using as an example. I would imagine that you could probably hit that number very quickly.
Very, very quickly. I'll also mention that most states have two metrics that they look at. So it's going to be your gross sales, so that $100,000 mark, or 200 individual transactions. Now, you could be selling a pencil and it could be a dollar pencil, but if you sold 200 individual pencils into a state and reach that threshold, you would then need to register and start collecting sales tax in that state. And even
It's
to back up a little bit more for the wholesale and distribution, that $100,000 that you sell into South Carolina could all
Mhm.
go to an exempt business. Those exempt sales are counted in our thresholds here in the States. So those 50% that clicked yes, we're selling into the United States, that is something I would definitely look into. How much are we selling into each state? And do we have obligations that we weren't aware of?
So looking at both the volume of transactions as well as the revenue of those transactions is important to consider, because one could easily be reached without the other as
Yes,
well.
ma'am.
Yeah, very, very interesting to know. It's a good thing that an ERP like Spire allows you to query on such things. So for all of those of you who are in the audience, you could quickly run a little report to see if you're either over 200 transactions into a state like South Carolina, let's say, or if you've sold $100,000 worth of product, maybe in one transaction to a particular state. So good to know. Walk me through the last three types of Nexus, Octavia.
So the click-through nexus is when an out-of-state business can establish click-through nexus in a state. It really just means that a business is receiving commissions for referring a certain amount of sales to an out-of-state seller, like through a website link. And so that really comes into play when you are doing any kind of commissions or you are partnering with any different company, is referrals or stuff like that. Their obligations can then reflect on your company. And so that can be a very tricky one to go through. The next one is going to be affiliate nexus. It is basically when an out-of-state business has an affiliate located within the state. The definition of an affiliate can range state by state, and it also depends upon the type of relationship that they have. But in most cases, that would be like a 1099 contract worker. Having one of those in a different state may also give you nexus.
Mm-hmm. Tell our friends in the audience who are Canadian companies what a 1099 contract worker is.
So in the US, you would have W-2 employees, which means that you are associated with your company pays you directly. And so that is a W-2 employee. Our 1099 contractors, basically they work on their own and they get paid on their own. So think some musicians are considered 1099 contractors if they work with like an orchestra and they travel. So it varies state by state. I would also look to see what that means for Canadian businesses specifically. But that affiliate nexus is very much centered towards our companies that are selling into the US.
Right. So I think for our friends in the audience, for example, if you had, sometimes we have a sales force that is on payroll, and sometimes we have contracted salespeople. If you're a distributor or if you're a manufacturer working with a distribution company, this can often be the model. And so if any of you do have a sales representative who is not on your payroll, but a contracted sales representative, and that person is flying or driving into the United States, into any particular state representing and selling your products, I believe, Octavia, if I've understood you correctly, that that's where the affiliate nexus concept applies.
Exactly. You worded that much better than I did. Thank you.
No problem. No, we're good. We're just, we are neighboring countries, but sometimes there's slight differences, and that's a very minor, same difference kind of thing. Marketplace nexus. So this one kind of grabbed my attention. So the eBays and the Amazons, tell us about how that works.
So marketplace can be very tricky, but it's when any marketplace, so think your eBays, your Amazons, selling on Walmart, you may be required to collect and remit sales tax if it operates in a state that you may not be in. So let's take Amazon, for example. Amazon has nexus in every state in the United States because they have an office, they have inventory, or they're selling into it. We all love Amazon. So you as a company, if you're selling on Amazon, you may only have presence in North Carolina, but your inventory may be housed in Amazon's warehouse in Virginia. You now have that obligation in Virginia because Amazon has that location there, and that is where it's storing your inventory. So just knowing, hey, I'm selling on XYZ marketplace, reach out to them and see, compared to the states that you're selling into, do they have locations there? Do they have nexus there? Because if they do, that may be a new obligation for you as well.
And are these marketplaces, so eBay, Etsy, Amazon, are they responsible for telling you where your inventory is being housed, or is it your responsibility as a business to find that out and make sure that you do have marketplace nexus if need be?
So there is a marketplace law, and I don't want to get too much in the weeds here, but Amazon has an obligation to remit the sales tax that was collected from your products and remit it back to the government. So Amazon does a whole bunch of returns every month, every quarter, based on what you may have in their warehouse. So the sales that are being done through Amazon, you don't have to worry about that sales tax collection because Amazon is doing it for you. However, because Amazon has that warehouse in Virginia, let's say Craig is in Virginia Beach and wants to buy your product, because you have an obligation there, because Amazon is there, when you send that product to Craig, you will add sales tax to that invoice if it is applicable based on the taxability. So that's what we mean about that marketplace nexus. It's not necessarily the money you're paying to that marketplace or your customers were paying to that marketplace, but it is if you are selling outside of that marketplace into a state that the marketplace has obligations in, you now also have that obligation. Does that make sense without getting too into the weeds?
Yeah, no, it absolutely does make sense. And I think it's important to understand the difference between, the transaction versus just where the inventory is sitting, right? We're really talking about the transactional level, I think, in any of these types of nexus. But who knew there was so many different types? I mean, I think that, again, this has all been very informative for me, and I'm sure for our friends in the audience as well. So different activities will trigger the different kind of nexus, that one would require. And so I think on our screen right here, we've got just a recap of some of the things that you mentioned earlier that would trigger the different types of nexus that exist.
Yeah, so when you're thinking about your sales tax nexus, there are a lot of common nexus triggers. A few that I'd like to call out on our screen, now that COVID is wrapping up, a lot of us are getting back into trade shows and traveling. Having trade shows in a different province or even state and traveling to that trade show could be a physical presence for you and create physical nexus. Drop shipping, so that has a lot to do with that Amazon reseller like we spoke about. If you are using a drop shipper that has a warehouse in a certain state, you need to know that and be proactive, find that out. You may need to be registered in that state. And then hosted data centers, that's one that tricks a lot of people up. If all of your information is housed on a data center, maybe you're in North Carolina, but your data center is in South Carolina, that may trigger a nexus for you as well. But really, let's always make sure that we are understanding where the physical aspect of our business is. Where do we have employees? Where do we have offices? Where are we storing that inventory? Are we sending people to make sales calls or service machinery in a different state or province? All of these things can trigger that obligation. And knowing going into it, hey, I need to look up and see, is this trade show going to make me have an obligation in this state? Being proactive about it really does ease that headache down the road.
And I know I don't have this on our slide deck here, but very quickly, does one ever contradict the other, the different activities, and override a certain type of status? Or does a business have to consider having multiple different types of nexus status simultaneously?
So if I understand that question correctly, one is not going to negate the other.
Right.
And I can speak specifically for the US here. The states want you to pay. So if you cross the line in one of these 5 aspects that we talked about, they're going to collect their coin and they're going to come after you and they're going to make sure that you're registered. And so it's not, hey, we have physical nexus, but we didn't hit the economic threshold. It's one or the other. You hit the physical nexus, so now you have to pay.
Okay. Thanks for clearing that up. It's a lot of information to absorb. Before we move on to tips that y'all will recommend, I'm sounding like you guys, y'all would recommend for us. That's what happens when I've been hanging out with you for a little while, that you all would recommend for us. I just want to ask our friends in the audience one more question, and I promise for the rest of the episode, you can sit back and listen. So the question is, do you currently have a process in place to help manage your sales tax compliance? And so audience, you should probably see that question on your screen. Your options to answer are, we do, and we love the process that we have. It's fantastic, fault-free, amazing. Or 2, we do, but we could manage this better, especially as we sit through this webinar and hear more and more details. I'm thinking we could do this better. Or your last option is we do not, but we need to have better management in place. So I see that about 40% of the audience has voted. So we'll give it a few more seconds to allow people to share where they're at in terms of how they manage sales tax compliance. You know, it's like anything tax related, there's all these caveats and documentation and things that one needs to be aware of. And it's not a finite learning time, right? It's not like once you've learned this stuff, you've learned it, that's it, you're good to go forever. As we know, governments and taxes and rates change constantly. So this is an ongoing thing here. I'm going to go ahead and close the poll, and I'm going to share those results. So Craig and Octavia, you can see that about just over half of our audience, so half of the half, right? So half sell into the United States. And so half of that, I guess, would say that we do have a sales tax management process in place, but we think we could do better. And then about 45% are saying we don't have anything in place and we need to. So I think that that's a really good way to segue into the tips that you guys have for our friends here today about managing sales tax compliance. So walk us through that, you know, help us understand what you would recommend to get things started for businesses.
For sure. So that first step in managing sales tax compliance is understanding your nexus footprint, which again is where you must collect and remit that sales tax. So once you have that understanding of where you have established nexus, you now need to be registered. After you get registered, you now have that requirement to begin collecting tax. Trying to calculate the correct tax amount can be rather difficult, and we'll take a deeper dive into that in a bit. But the next step is making sure that any sales to exempt entities like resellers, distributors, manufacturers, you'll need to keep track of those exemption certificates and ensure that they're valid and current. And then lastly, you've collected all this sales tax, now it's time to pay the government. So sometimes that is just to the state entity. In the United States, we can get a little tricky in some of our states where you also have to pay to local tax authorities. And you have to do this in a timely manner, whether it's monthly, quarterly, or annually. And you have to keep track of all of those states because they all differ. While these slides may make these steps seem very simple, there's a lot that's underneath all of those to ensure that you're staying compliant.
I can imagine. Yeah, I love PowerPoints with the bullet forms. It makes it look all so easy. But just step one in and of itself, understanding where your business must collect and remit sales tax. You know, that evaluation process when we're not tax experts, right? We're not accountants, and some of us are not American to even really know which state this and that. Just staying abreast of all of that and understanding it is almost a full-time job. Right. And so I think that while these bullet points make the 5 steps very easy, I know that the folks at Avalara work really hard with our partners, our Spire partners and clients to help evaluate where you are as a business in each of these steps. It's not just here are these steps, you guys figure it out and we'll happily help you later on. Like it's a big thing. A lot of thought gets put into this. So when we talk about knowing where your business must collect, like understanding that as your step one, how would you kind of drill down on that, Octavia?
So it's really the most important to take a look at your business activities and see how they can trigger a nexus obligation. So those 5 nexus obligations that we touched on earlier. Physical nexus is definitely the most obvious and easy to identify. You know where you have people, you know where you have offices. That's easy.
Mm-hmm.
Next is figuring out, well, do I have economic nexus? Do I have this affiliate nexus, the marketplace nexus? As Katie mentioned, Spire gives you the ability to be able to see how many items you've sold into a state and what that gross revenue is.
Mm-hmm.
Take a look at that and compare it to what those thresholds are in the United States, and the same for Canada as well, and see if, hey, we've missed a few states and provinces along the way. And then it's also really good to consider what nexus obligations will come as you start to have new sales channels or a new go-to-market strategy. These things can affect your nexus. And before you have a wild plan, it's good to understand what that can do to your tax team.
So something as simple as having an e-commerce platform. Now you've got a web store, right? And let's say you've never had a web store before, but you've got that. And we know for a lot of web stores, it's a borderless concept, right? You can hop online and purchase from the web store almost from anywhere. It's a lot of the reasons why people have web stores is to open up those borders that traditionally they had to sell their product. So just something as simple as, we've got a web store and we are selling into even just New England, right? Let's say you're an Eastern Canadian business and you are opening up to sell to New York, New Jersey, Connecticut, Vermont, right? Like then these are things that you have to consider. So it goes like, don't limit it to, oh, we don't sell on Amazon or we don't sell on eBay, right? I think that really considering all of the transactions, where they take place, like Octavia is saying, is probably one of the biggest things, and probably why it's step one.
And I'll also mention, because you brought up a fantastic point of selling into New England. Canada, you guys are our neighbors to the north, and sometimes you guys, it doesn't feel like we're different countries, right? But if you are a Canadian business that is selling into the United States, that is an international sale, right? So there are even more complicated things that come with selling internationally. All of your tangible products should have an HS code. That is an item classification code that helps determine what the tariff and duty fees would be needed as you're selling these things internationally. And so a lot of Canadian companies that we at Avalar speak to don't even realize that this is a thing for them. When they sell into Europe, they realize that this is a problem. But because we're so close to you guys, it seems like we're next door neighbors. It just doesn't even cross most Canadian companies' minds that this is indeed an international sale. So there's a whole slew of new complications that can come with that.
Yeah, whereas I think we're all very used to thinking about what the VAT might be. When it comes to the United States, there definitely is some difference. And you are our neighbors to the south. We are your neighbors to the north, but we do things differently, that's for sure. So step 2, register and collect and remit. Talk to me about that. The remit part never sounds like fun, but go ahead and talk to me about that.
So once you understand where you need to be registered, the next step is actually getting registered, right? So each state's registration forms can be a bit different. Generally, they want you to be registered within 30 to 60 days of exceeding that economic nexus threshold. And so you may realize that you have an obligation, and you may realize that you've actually had this obligation for a year and a half and you didn't realize it. So what's next, right? What happens if you have those past liabilities? Life is not always simple, and sometimes that registering just isn't enough. So when it's not enough and you've established that nexus a while ago and never got registered, you may have to do what we call VDAs, voluntary disclosure agreements. So that's when you raise your hand and go to the state of North Carolina and say, hey, listen, I know I messed up. I know I haven't collected sales tax for the past 2 years and I want to make it right.
But I'm Canadian.
Right. And listen, our states don't care if you don't know our laws, which is the worst part, right? You can't have that plausible deniability like we would all love to. And so this VDA program actually lets you raise your hand and say, hey, state, I know I messed up. Let's make it right. And they will shorten that look back period. It'll take off some of those penalties and fines. You go through that process, you pay up the state, and then you register. And then from there on out, you promise the state, hey, I'm going to make sure that you get your money, make sure that this is not a problem anymore. So figuring out what that obligation is one thing, but let's figure out also, do we have past obligations that are going to trip our company up in the future?
And while it might be painful to kind of take a look back and to, sheepishly raise your hand to the state of North Carolina and say, I'm so sorry, I wasn't aware, I didn't do this properly. Getting over it and getting it done will actually save you a ton of headaches moving forward, because I think the reality is, this isn't going to go away, right? So definitely take a look at what kind of activity you've had, and if there have been, some remittances that didn't take place because your business was not better equipped to do that. Might seem a bit painful at first, but I fairly confident, Octavia and Craig, that it'll save you a ton of headaches and potentially a lot of money in the future to get it done, right?
It'll save both.
Yeah, both. Good. Okay, step 3, calculating how much do I actually have to pay? Right? So how do you do that? I mean, we're talking about so many different states, different types of nexus, exemptions, thresholds. How do I know what's the right amount to pay?
So it's not easy, Katie. I don't know if you're aware, but there are 12,000 different taxing jurisdictions in the US alone. So let's add Canada into that too. That number jumps up pretty high. It's crazy to think that we in the United States, we have 46 states that collect sales tax, and then our District of Columbia, DC, also collects sales tax. And just that, we have 12,000 different taxing jurisdictions, and each of these jurisdictions have different rates, and they vary in product taxability rules. I have a
Wow.
really cool example up on the screen here. I love this example because it's absolutely outrageous. So in Commerce City, Colorado, next door neighbors have dramatically different sales tax rates. One rate is at 4.75% and the other is 9.25. If I lived there, all of my packages would go to my neighbor's house.
Yeah.
That's just insane. And you would never know that. It's not different streets. It's the same street, same zip code, different tax rates, right? Most people think that our tax rates align with zip codes, and that's just not the case. Zip codes help our postal service give out mail. They have absolutely nothing to do with tax compliance at all. And so figuring out what those rates are in each jurisdiction, we have some zip codes that have up to 10 rates inside of them. So knowing exactly what that rate is helps you down the line. It helps with customer service because if your customer knows that you're overtaxing them on sales tax rates, they're going to go shop with your competitor. Or if you're not collecting sales tax at all and the states figure that out, they may come audit you and now you have a price tag over your head because you weren't collecting that sales tax. So it's very difficult to keep up with all of those, and they change all the time.
Yeah. Yeah. I know even just from filing personal income tax that my accountant tells me every year, "Oh, you don't qualify for this anymore, but you may qualify for this," right? And so the same stands true for sales tax. These things change. I definitely understand that the zip code concept is not what will make one side of the street part of a jurisdiction. So these are more like counties and areas that are separated, if you will, even if they are in the same state. They fall into a jurisdiction that, for whatever reason, that municipality falls under a particular category, let's say, right? Is that a right understanding of that?
That correct.
Okay. And I had no idea that there were 12,000 different taxing jurisdictions. And then when you said add the Canadian provinces, we really only add this much to that number. I joke about being from the French province, the Belle Province of Quebec. I thought our taxes were complicated, but they're actually quite simple compared to what you guys have going on in the United States. So a lot to consider. So being able to quickly and accurately calculate, Octavia, comes down to what, really?
If you're doing it manually, it's a very time consuming thing, right? You're going to have to go to each state's Department of Revenue site and upload their tax rates. And you're also going to have to do this pretty often because they change all the time, right? So you may check at the beginning of the month and then you could check on the 21st, that tax rate or the product taxability may have changed. So it's a lot of upkeep on your accounting team or your IT team. Sometimes the IT guy is the one that puts in all of the rates. It's also prone to human error, right? We all make mistakes. We all mess up. Things happen.
Sure.
What happens if it's one lady that does it all and then she gets sick and she's out for a week and a half, right? Now you have no idea what those tax codes are and you're just praying that you're collecting the right amount.
Yeah. Yeah. And then on top of it, some of those other caveats like sales tax exemptions, right? Non-for-profit organizations, or, I myself have done a lot of work throughout my career with First Nations organizations throughout Canada. And so like any non-for-profit or funded organization, they do have certificates from the government that exempts them from taxes. So I would imagine that in the United States, those also exist, but they're there could be that many more of them because of the number of states and jurisdictions that you guys have.
Correct. And the exempt sales really is one of the trickiest parts of sales tax compliance. And we speak to a lot of wholesales and distributors that say, hey, sales tax is not a problem for us. You're right. Sales tax itself may not be, because you don't need to be collecting it. But what does your exemption management process look like? Because these exemption certificates in some states like Florida expire in a year. So every year you would need to go back to your people in Florida and say, hey, can I get a new exemption certificate? They could be filling out the wrong forms, right? I talked to somebody a couple of weeks ago, and their sales team was the ones that went out and got those exemption certificates. They had no idea what they were looking for. You could have handed them anything, and they would have had no idea if that was the correct form or not, right? And the government doesn't care. So when they come to you and ask for that form and you don't have it, now you're on the hook. We dealt with a company in Illinois that was missing 6 exemption certificates and had a 6-figure penalty fine with what they owed and with the fine on top of it, because they did not have these exemption certificates, and it was a very large customer of theirs. So making sure that those exemption certificates are up to date and accurate is really the most important thing when it comes to compliance.
And given a state like Florida, where those tax exemption certificates have to be maintained annually, I'm sure that there's other examples of that other than just Florida. How long does the seller, so our audience, let's say, selling into Florida to a non-for-profit organization, how much history do they need to keep? If we talk about the concern of being audited, we know that audits don't happen live, real time. They go back and look at the things that you've done. So if I'm a business and I don't have the last 3 exemption certificates from that Florida company I'm dealing with, what's the problem there? There's consequences there. Is there a rule of thumb as to how many years we need to keep that stuff for?
So I will say, in rule of thumb, if a state comes to you and wants to audit you and look back, typically they look back between a 5 and 7 year period. With that being said, a lot of these rules are new, right? Economic nexus is a new thing for the states. It's about 5 years old, right? So before then, these things probably wouldn't matter as much.
Right.
So there's not an exact time that they would need to have those. My advice to all of those that are listening is to go and look and see what your exemption management process looks like today. Do you know the last time that you went through and audited all of them to make sure that they were not expired, that they were up to date, that the correct person filled them out? And if you realize that some of them are not correct, I would start reaching out to those companies and getting new exemption certificates on file. Avalara has a solution, and I will say that on average, we have a 30% error rate when we have companies send us the exemption certificates that they have on file that they think are perfect. On average, about 30% of them are wrong across the board, right? Across big companies, small companies, everything in between. Across the board, 30% of them are incorrect.
Yeah, no, that makes sense. That's why I leave the filing of forms to other people in my life and not me. Everyone's good at something. Nobody's good at everything. So don't try and do this yourselves. Like, really, there are experts out there. When we talk about gathering that information, maintaining that information, and then ultimately what that leads to is an understanding of how you remit to the authorities, right? And I think, Octavia, you've got just a few key reminders here that our friends in the audience really need to think about when it comes time to remitting, right?
Yeah, so the last and final step in managing your sales tax compliance is filing and remitting that money that you've collected. So once the sales tax is collected, those funds need to be remitted back to the jurisdiction. And there are several nuances when it comes to sales tax remittance. This includes paper versus online remittance. Each state has different rules and guidelines. Some vary filing frequencies. So you have some states that want you to file every month. You have some states that want you to file every quarter. And then we also have some states that want you to prepay your sales tax. So California is one of those. They want you to prepay and then you reconcile on the quarter, right? So you may have paid them too much, or you may need to pay them a little bit more. Handling tax notices and filing in local jurisdictions can be a headache. Colorado, Louisiana, and Alabama, you need to pay sales tax to the state as well as each of their local jurisdictions, which can be a headache, especially if you don't know what you collected for each jurisdiction. And then lastly, I would want to touch on, there are some states in North Carolina or in the United States where if you file in a timely manner, you actually get some assistance there. So it is cheaper and you get a payback. So that is something to keep in mind too, that some of our states reward you for being early.
Staying on top of that, I mean, how many states? There's 52 states in the United States.
We have 50 states and a couple of provinces. I'll also
Right.
mention, you may hear the term nomad states. So there are 5 states in the US that do not collect sales tax. Those states are New Hampshire, Oregon, Montana, Alaska, and Delaware. So when
Okay.
you're selling into those states, you do not need to be collecting sales tax because those states do not have a sales tax program.
That's why I like the outlets in New Hampshire, right? So that's a lot. You know, I can't imagine how one person within an accounting department can stay on top of this if you're a business that's selling into the United States. You know, we talked about manually doing this, you know, just seems very cumbersome, right? A full-time job plus hours on top of that, right? And then fully understanding the forms that you're filling out. So all of these things that we've talked about. Craig, you've been so quiet and you've let the ladies chat. I'm excited to invite you to join us here because you can talk a bit more about this from you know, what does Avalara do to help manage this? And ladies and gentlemen in the audience, you know, we want to inform you of how an organization like Avalara really are experts on the subject. It's not so much to show you, you know, this is how you have to do it, but of all the things we've talked about, the thing that pops out in my mind the most, Craig, is how do you manage all of this on a day-to-day basis? Because you probably don't have a full-time person just doing this in your office, as we can tell from the polling questions that we had. So Craig, if we wanted to work with Avalara on this, because it is a big ball of wax, you know, how does that fit in? Like, where are you guys able to help us or help an end user, a client, with sales tax compliance?
Yeah, exactly. So one, thanks for that information, Octavia. So what I wanted to do was just jump in and talk about, you know, how Avalara can help manage or even automate these 5 steps that Octavia went over with you. And just for starters, we want to figure out exactly, hey, where do you need to get registered, or where is your Nexus footprint? That's the foundation of sales tax. And if you have questions around where you should be registered, we help with what we call a sales tax risk assessment to help you understand your Nexus footprint. So it provides an insight of where you should be registered, and then we recommend a plan for you going forward. And that's typically offered in 3 different avenues. So we can take a look just at an economic footprint, like, hey, what's your economic Nexus exposure? Then we do have 1-year look backs, then we have multiple year look backs. So all in all, that's the foundation for us, Katie, is we want to take a good look and see, hey, where do you need to be registered? Because that ultimately is the foundation of sales tax.
Mm-hmm. And then I would imagine, like, you'll work with the Spire partner and the client. So one, you know, understanding where you are, like we talked about, the where, understanding the what, like what categories do you fall under in terms of Nexus,
Exactly.
you know, all the way down to how many years have gone by that you've maybe missed on this and what can we do about that? And then all the way to the end, right? Like, who are you exempt? Who is exempt from remitting sales tax to you, and who are you exempt from charging sales tax to, and making sure the documentation to that is in order, easy to find and accurate. And then lastly, you know, how and what you have to pay out. So you guys are really there to help
Yeah,
understand the whole thing, right?
exactly. And I'll dive into each one of these individually, just at a really high level.
Mm-hmm.
So ultimately, like we said, like figure out where you get registered first, and then step 2 is getting registered there. So once you've identified these states, whether it's through an internal audit or using our sales tax risk assessment, Avalara can help you get registered. So instead of going to each state and filling out multiple forms with the same information, just rinsing and repeating, we could streamline the entire process for you.
Mm-hmm.
Just do a 1 questionnaire that we use. It's a universal to all the states, and you just tell us, hey, what states do you need to get registered in? We get you registered in these amount now, and then 2 years from now, we can evaluate if you need to get registered in more. So
Mm-hmm.
ultimately, like I said, just 1 simple questionnaire, and then from there, we help you get registered in states as needed.
Mm-hmm.
So after you figure out where you need to get registered and after you get registered, that's when Avalara comes in. And this is what people mostly know us for, is that calculation. So how do we automate the calculation? And sometimes, trying to figure out to calculate the right rate has been very difficult. But, based on
Mhm.
Avalara and the integration into Spire, to calculate these sales tax rates in real time, you no longer have to worry about that. Like
Mhm.
updating the rates or rules or being familiar with the varying taxability. That's something we
Mhm.
just talked about, is we don't, unfortunately, not all businesses have that expertise to take on that bandwidth to be able to handle sales tax, especially in
Mhm.
each state that varies so differently, because we vary differently with nexus requirements. We vary differently with tax rates. So there's just so much that goes into it. And Avalara is looking to, based on that Spire integration, we're looking to automate that process for you. So you
Mhm.
continue to invoice out of Spire, just do an API call. We're going to be able to give you accurate tax rates that you don't have to worry about, hey, is this right based on the product that we're selling, based on where we're selling it. So we
Mhm.
take a real deep dive into exactly, what is being, what order is being placed and what transactions and items are being taxed.
Mhm. Mhm.
And then from there, sorry, you're going to say something. Go ahead, Katie.
No, go on. You carry on. I'll save my question for after.
From there, and you mentioned this, Katie. So, and the thing that we overlook a lot, or something that's really overlooked, is tracking your exemptions. And
Mhm.
for those with exempt cells, that's something that Avalara helps track. And we monitor and report on your exemption certificates and help you be more proactive through sending requests to solicit new updated forms from customers. And this is something with each state, it varies as well, whether it's expiring or what additional forms are required, because each state has its own requirements for these expiration certificates, whether you're a reseller or a government agency. So those are things that we're going to be managing on your behalf as well too, as opposed to you just saying, hey, we got an exemption without any verification behind it. So we validate every one of those exemptions to the proper Department of Revenue to make sure to take that liability off you completely.
Mhm. Mhm.
Then based on all that data, so where you collect, where you register, and how you calculate, we're going to take all that information and file for you on your behalf. And so Avalara automates that filing and remittance process. So we'll take your sales tax returns, excuse me, on your behalf and pay the states from an account that you fund, similar to like a funding payroll.
Mhm.
This gets you away from that monthly process of just filing multiple forms and
Mhm.
paying various jurisdictions.
Right. So those tax collections are allocated to the appropriate account, and then from there, you guys will manage that. So both on the accounting side at the GL level, Inspire, things are managed and organized very nicely. And then also in terms of the actual transaction of remittance taking place, Avalara will manage that too. I'm sure in a secure, encrypted, and all
Exactly.
that kind of thing. Yeah, perfect. Two things that I walk away with from this is, just because you might be selling to a non-for-profit business does not mean that your business is non-profitable. Two very different things. Okay. And if you are a profitable business, then the government wants their taxes from that. Okay. So, we might sell items, to a non-for-profit that has a trade show themselves every year or a conference every year, and all the swag that they buy from their vendors, maybe it's for the non-for-profit event, but your company has made a profit off of it. Or medical equipment. We have Spire clients who manufacture and distribute medical equipment. So wheelchairs, grab bars, all that kind of stuff for home health care. And if you are selling that into the United States, then it might be purchased from a company who is funding people with disabilities with these pieces of equipment, but you yourself are making a profit off of it. So non-for-profit doesn't mean that your business is not profitable. That's the one thing. The second thing is just the volume of knowledge that needs to be retained in order to properly manage this is just huge, in my opinion. And I think relying on experts about how much, where, how the taxes have to be paid, how often it all needs to be maintained is just something that, again, even a full-time person within your organization would have a hard time keeping up. Um, there is something called SST, and I think this is a nice note to kind of wrap it up on. We talked about taxes and penalties and governments and jurisdictions, and it's kind of a heavy topic, right? Who says accounting isn't fun? But at the end of the tunnel, there is some light. And in the United States, there are, I believe, some states that have a program called SST. And Craig, maybe you can tell me a little bit about that.
Yeah, I'll sum it up for you. It's a state-run program called SST, or Streamlined Sales Tax, for some of you that might have heard of it. But ultimately what it is, it's a collection of states, it's 25 states in total, that are ultimately paying your technology costs for you to be compliant within their state. So they look at it as, hey, if you're going to start collecting sales tax, we're more than happy to pay your technology costs because we know we're going to make out in the end. But things that they're covering are listed on the right. So they're going to go ahead and pay for their registration in the state. So we're actually a partner with SST. So we use them as an exclusive member, whereas you'd be using us for the services, but they'd be paying for your technology costs. So getting you registered in the proper states, paying for us to file and remit on your behalf, paying us to give you that tax calculations. And then a huge aspect that is often overlooked, it's the first line of defense under audit protection. These states run a program, it's really tight, but they're going to be there to defend you during that audit. So it's a real nice system that's in place that, like I said, it's covering the technology costs on your behalf.
And almost half of the states in the United States have this program, from what I can see.
Yes, and
Yeah.
over half of the sales tax collecting states, because the nomad states take us down to 45. So yeah, 25 of the 45 states participate.
So that's good. So ladies and gents, if you can see that screen and highlighted in white are the states that do have the SST program. So makes life a little bit easier in terms of sales tax compliance when you're having to deal with these particular states. Is there any hope that other states will adopt this program, or I don't know, can you share a theory with us?
Just this year, there's been 2 additional states that have been
Oh.
appointed to SST. So yeah, it's growing. So one thing, those 45 states, we're seeing that number grow as well too, where additional states want to start collecting sales tax, but the SST included. Like I said, 2 in the 2022 have added the SST as part of their program.
Well, it sounds like a good program. It helps to make things a little bit easier and helps businesses kind of better budget for services, technology, software, whatever they are wanting to adopt to help be sales tax compliant. Craig and Octavia, thank you both so much for being here with us today and for the time behind the scenes preparing for this webinar. It's been very informative for me. I definitely am walking away with a few good gems, as I'm sure our folks in the audience are as well. Again, ladies and gentlemen, if you do have any questions about Avalara and Spire's integration, how they can help you manage sales tax compliance, please reach out to your Spire partner. Octavia and Craig will happily work with your partner and yourself to be able to further explore if Avalara is a solution that you really should be considering for your sales tax compliance into the United States. So again, thanks guys so much for your time. Ladies and gentlemen, I'll just wrap up with reminding you that our Spire virtual conference is taking place October 14th. It starts at 10:30 a.m. Eastern time. I do recognize some names in the audience who have already signed up, so thank you so much for doing that. Our early bird pricing ends this Friday for your ticket, after which time the price goes up a little bit. You can find all the information at spiresystems.com under our events. You'll see a menu item for the 2022 conference. I really hope that you can make it. There's going to be a lot of learning, a lot of training, and also great information from a lot of our third-party developers as well. Again, Craig and Octavia, thank you so much. It's been a lot of fun, and I hope to see you guys really soon. And thanks to everybody in the audience. Have a great day.
Perfect. Thanks for having us.
Thanks,
Bye,
Katie.
guys.